market has recovered from the lows, definitely down about just 0.3%, but there are plenty of stocks which are under pressure. Metals are taking a big knock this morning. SAIL, Tata Steel are all down, and then you have all your platform companies. So whether it's Zomato, which is under pressure, something like an Easy Trip is also down about 6% some profit taking there. But shifting focus to the commodity markets now, Manisha Gupta is joining in. Manisha, morning. What's the one commodity you're tracking?
Thank you for that, Sonia. Well, we have seen most of the non-ferrous metal continue to decline, but the ferrous metals still seem to be holding firm. So whether it is about steel or iron ore prices, we have seen trades continue to be on the positive side. Iron ore especially is trading at a 3-month highs, and for the month of November, it was the first monthly gain in 7 months that we saw the commodity put on. And iron ore prices are trading 28% higher in the last 1 month itself. If you look at the overall price mechanism on how it really has worked, this year's high has been $171 per ton. We did see a low at 76.5. That was in the month of October sometime. And we have seen an all-time high pardon me, in case of iron ore at $224 a ton. That was in last year, and the current price is trading at 108, is lower than this year's high and nearly half of what we have seen as an all-time high in the previous year as well. The reason you have seen this kind of a volatility in prices clearly comes in from China, because 2/3 of all iron ore that is seaborne is consumed within China itself. And China in the last year did have that policy that housing is for living, not for speculation. And since then, we have seen a decline come in for many of those metals there. The housing sector itself, the real estate, all of that saw a decline. This is the data from China yet again, Jan to October 2022, whether it has been about national home sales, property investment or new construction. As you can see, it has been a sharp decline in this year. So China to the road of recovery, yes, but can these numbers and how soon can these numbers turn into positive or even flat is something that the street will have to really watch out for. In the meanwhile, this is the World Steel Association report, which says that in 2022 till time right now, we have seen a decline in iron ore demand from China and European Union, and the global number as per them is down by 2.3%. So we are looking at a contraction in this year as compared to the previous year. This is what we are seeing in sense of demand for this year and the next year as well, where you are looking at a much lower growth expectation coming in, and that is perhaps going to continue to weigh in case of the iron ore prices there. This is what we have seen in sense of the global markets, where we are looking at Chinese demand continue to decline. European Union is down as well, but the Indian output is up by 6.4%. One of the very few countries where you are looking at a higher production when it comes to the global steel there. The price views or the future forward really is going to be about the China COVID restrictions. How do they play out? The US fund policy, the whole markets are in a jittery because of that as well. And there are reports on how China will replace old steel capacity with electric arc furnace. That would mean that we perhaps have seen iron ore imports or demand peak out already in 2021 in case of iron ore. This is the view from ING in sense of 2023. They're expecting a big range in the next year. The quarter might start with $85 and the fourth quarter might end with $95. So they're expecting the prices to consolidate or even go higher. When it comes to the other reports, the expectation is S&P especially thinks that $105 of an average is what you could be looking at in sense of iron ore prices.
Okay, thanks a lot for that. So that is on the metal.